Good morning, listeners, and welcome to the Trade Talk podcast. Friends, today again, global cues are completely mixed, but crude is again started quoting below the mark of 110. Dollar index, which was around 98, is now trading below that level, around 97.80, 97.85, and even 10-year bond yield is around 2.3332. I am to say all these key factors are on the declining side, and as compared to yesterday's closing they are trading little lower, which is certainly positive in the short term. Yesterday also we saw a quick rebound in the market from lower levels. After opening higher it went down, but finally it closed higher. It closed above the mark of 17,450, which is positive. On the higher side, 17,500 is certainly going to act as major resistance for the bulls, as well as support for major resistance for bears and major support for bulls. Around these levels, certainly the market is going to spend some more time. But in case if we see any drop close to 17,400 levels, then there we should look for adding some long positions with a contra view. Buying around 17,500 or 520 looks like not going to yield very much to long traders. But if we see any drop, then certainly we should look for adding some positions with a stop loss at 17,300 on the downside. On the higher side, 17,650, 670 would be major resistance. And if we see the market is starts quoting around those levels, then there we should look for taking a contra view of going short on the Nifty with a stop loss at 17,750, and it is all for the day. So if we see the market is moving towards 17,650, 670 levels, then there certainly we should look for taking some contra bet of going short or buying some put options with an intraday view. For the Bank Nifty, there also we saw recovery, and Bank Nifty managed to close above its previous high. So the next level to watch out for would be 36,600, 36,650. On a monthly basis, both Nifty and Bank Nifty has reversed the trend sharply. So for the next month, maybe we are going to see some consolidation, and the market will consolidate within the broader range. So ideal strategy should be to look for taking profit on long positions between 17,600 to 17,700 or 800 levels. Sector specific, again we are going to focus on financials along with technology and few metal companies. Yesterday we saw some profit booking in metal companies, and the reason is always like if we correlate with the crude prices, then most of the time we can gauge the trend of metal companies. Like when the crude started moving upward from the levels of 80 to almost 120, 130, we saw equal amount of rally in all the metal companies. Now when the crude started falling from the highs, we are seeing some weakness in metal companies. So yes, most of the time both these particular trend follows each other, and that's the reason we should be little bit careful while adding position in metal companies at higher levels. But yes, we need a selective approach for all the metal companies now onwards, and we are specifically bullish on Jindal Steel and Power and Tata Steel with a medium to long term view, not with a short term view. And for technology companies, we need to focus on mid cap IT companies because most of them have fallen to their crucial levels, and now they are recovering from lower levels. On the other side, all these large cap IT companies are trading very close to their resistance levels. So it is better to focus on mid cap IT companies instead of focusing on large cap IT companies. And as we are going to see furthermore weakness in the crude, I think it will help again auto companies and cement companies in the near term. Friends, that's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening in, and have a wonderful day to all of you.